the ultimate market showdown come next. After the volatility of this week's inflation data and the sudden news of a US-Iran ceasefire agreement, the market is at a major inflection point. On one hand, geopolitical tensions are cooling, sending oil prices back down. On the other, if this week's CPI confirms an inflationary jump, it's going to reignite fears that inflation is back with a vengeance. Today, DBG markets locks in the three core drivers for the dollar, gold, and oil in the week ahead. This week, safe haven momentum for the greenback faded as ceasefire talks progressed, leaving the dollar index hovering just below the critical 99-point level. But next week, the spotlight shifts from the battlefield back to the balance sheet. Tuesday's PPI, the Producer Price Index, is going to be the game changer. If both CPI and PPI confirm that we're seeing a second wave of inflation, the Fed will be forced to play its hawkish hand once again. But here is the catch. Because the market has already priced in much of the no-cut narrative, the dollar's direction is still a toss-up. Keep your eyes on the 99 mark. It's not just a support level. It's the pivot line for the entire dollar trend. Turning to precious metals, gold is at a strange spot right now. Technically, a ceasefire is bad news for safe haven assets, yet gold actually tested the 4,800 resistance level as the dollar weakened. Going into next week, gold faces a double whammy of pressure. First, we have the formal negotiation results coming out of Islamabad this weekend. If a deal is finalized, that war premium is going to evaporate fast. Second, sticky inflation means higher treasury yields, which is a massive headwind for non-yielding assets. Expect gold to remain in a broad, choppy range between 4,700 and 4,850. The final focus is the shifting landscape in the Middle East. While a 2-week truce is on the table, Iran hasn't let go of its control over the Strait of Hormuz. This means the war premium is still very much alive. If negotiations show any sign of a breakdown, or if we see further escalation in Lebanon, Brent crude will instantly wipe out this week's losses and charge back above $100. Conversely, if energy flows return to normal, we could see oil look for support down near $85. Bottom line, next week is about the shift from noise to signal. The geopolitical heat is fading, but the inflation hammer is about to hit the real economy. As we move into this volatile second quarter of 2026, stay focused on the final Islamabad announcements and Tuesday's PPI print. This is DBG Markets, keeping you ahead of the curve. See you next week.